Welcome back. You're watching Midcap Radar. Well, like we promised, we are going to the management of DCX Systems. The stock is in focus as the company recently bagged over 800 crores worth orders from US defense player Lockheed Martin, and this for the supply of electronic assemblies. The company has a strong order book of over 3,000 crore rupees. To discuss this and more, we have HS Raghavendra Rao, the founder, Chairman and Managing Director of DCX Systems with us. Good afternoon, Mr. Rao. Thank you so much for joining us. First up, talk to us about this particular order win from Lockheed Martin. At the end of Q2, where was your order book with this particular order win? What is the order inflow for FY25 and where is the order book currently stand at?
Firstly, this Lockheed Martin order, we got totally about $100 million. This has to be executed in 12 months. Of course, this is related to the offset orders. And as on the order book, we have about 3,000 crore plus order book in hand. And going forward, we have a strong pipeline order to be converted to the purchase order. We are expecting to happen very shortly. There are final discussion with customer is happening, various customer as well as India and outside India. And looks very pretty good in the upcoming pipeline orders. We have a lot of good pipeline order has been lined and which has been almost is finalized, yet to get the purchase order from the OEMs. That's what.
So, Mr. Rao, you're talking about strong order pipeline that has come by. This recent order, is it higher margin than what you've been usually making? If we talk about EBITDA margins, the first half didn't look so strong versus the last year. You've seen a degrowth as well. What is the second half looking like in terms of order flows? And especially on this one, is the margin going to be higher?
See, firstly, as already I mentioned, our company, you cannot measure the quarter wise, like $100 order to be divided by $25 every quarter. This cannot be worked. Our major revenue or profitability come in the last quarter only, because there are constraints on the material supply and margin, NREs and the BOM variation cost. It will be acquired in the end of the last quarter only. So hence it will not be a compare for the last quarter, this quarter and every quarter. And of course, the new upcoming order, we have a better margin. And because of the many things, as you know, we started our own backward integration for Renil. This giving more backup to improve our EBITDA. That's what I try to put it.
Okay, no, we understand that. What we want to understand from you is that, especially in the last couple of quarters, there's been quite a lot of variation, both in earnings, like you mentioned, lumpy business. But steady state EBITDA margin, if you look at it on an annualized basis, what is it that we can expect? And when you're talking about, the kind of order size that you've received from Lockheed Martin, at what EBITDA margins will you be executing this particular project?
Basically, until I supply and categorized everything, I am not able to disclose the EBITDA margin until we execute the POIs. This POI has been come very recently in the last 2-3 months. We are acquiring all the material. There is a class in the PO also, any upward and downfall for the material variation. Until we execute and ship, will not be able to disclose our EBITDA margin. But one thing, it is a better margin and better program what we have received it now. So I cannot give you the EBITDA margin exactly in the as on today, because all the material is in the pipeline to come and start production. There is a lot of testing, other process has to take place. Presently, I cannot able to define what is the EBITDA, but one thing I'll assure you that we have a better margin in these programs.
Okay, all right. Mr. Rao, we get it. It's a lumpy business, can't compare it quarter to quarter, but year on year, we'll have to compare. That's how we assess whether the company is growing or not, right? Important for investors. First half, you've seen a decline of 30% in revenues and profits have also declined. Can we say second half will be better than first half? What kind of growth rates are you looking for the full year, FY25 and maybe FY26 as well, if there's some visibility in terms of order pipeline?
See, you can see last 7 years from the DCX side, and the quarter-wise you cannot compare. But there is a drastically increase in our revenue in the last quarter, and this also we are hoping to have achieve more than the last year revenue and EBITDA margin. That's what the company targeting, and there are possibility on the order book size and upcoming order now, mainly on the supply chain got improved. And that's the main constraint. This year, we are not facing, at this moment, we are not facing any challenges.
Mr. Rao, Mr. Rao,
Yeah.
if you could just interrupt you. You said you're expecting a higher growth for FY25 compared to FY24. Could you give us a guided range, in terms of top line, in terms of EBITDA, in terms of margin and PAT? What is it that we can expect for H2 and also for FY26?
As you know, I have a lot of restriction in giving the guidance number, and that depends. I am not only executing with the one customer. Suppose I have a 4 or 5 PO. We have a different process, different margin. Which one I am going to ship based on the customer, that based on the numbers and based on the program and the process, my EBITDA is going to decide. So presently, I am not able to give guidance number until we have.
Mr. Rao, with the order book that you have in hand, could you give us a directional sense, if it's a mid-teens, if it's a double-digit growth, a single-digit growth, give us a sense of what is it that analysts can pencil in?
To be frank, I cannot able to disclose now on the what is until, see, it is not like when people knows when we get the PO, they know the margin. Because there is a variation in the raw material cost, which we are covered by the customer. So until we purchase and define the material cost, we will not be able to disclose. Of course, it is not going out of our pocket. It has to be claimed from the customer. That is a contract that is called a BOM guarantee we have. Today, I cannot able to tell you what is the EBITDA margin until I have a supply chain in control, material has come. I cannot define the margins.
Take that point, Mr. Rao. We tried, but of course, as you said, you will not be able to explain or give details on the margins as well. But after Q3, maybe some more details that will come up, and we'll get to know more about the outlook of the company as well. Thank you so much for joining us today with your insights. That's the word coming in from DCX Systems. But with that, let's